The number one message I keep getting this week goes something like this. Why is XRP not moving? I see the news, I see the partnerships, I see the regulation getting cleaner, and the price just sits there. What am I missing? Here's what you're missing. You are watching the price of a railway company's stock in 1869, 1 year before the Transcontinental Railroad finished. The price looks stuck. The construction looks endless. But the moment that final spike is driven into the ground, everything reprices. Permanently. What happened this week with the New York Stock Exchange and Securitize is not a headline. It is the final spike being driven. And today, we are going to prove it. Welcome back. Today we're going deep on what just happened between the New York Stock Exchange, Securitize, BlackRock, and Ripple, and why the connections most people are glossing over are actually the most important signals we've seen in years. Not financial advice, just data, logic, and the structure of what is being built right in front of us. Let's get into it. Let's start with the hard truth most people are missing. When you heard that the New York Stock Exchange is partnering with Securitize to build a 24/7 tokenized securities platform, your first instinct was probably, that's cool, another partnership announcement. And that's exactly why you need to understand what Securitize actually is and what this partnership actually means. Securitize is not just another fintech startup. Ripple invested in Securitize's $12.75 million Series A in 2018, alongside Coinbase Ventures. They didn't just invest in the company. They helped build the company from the ground up. Think about what that means. Ripple saw, in 2018, that tokenized securities were going to be the rails that traditional finance eventually had to run on. They planted a flag years before anyone else was even talking about this. Fast forward to last year, September 2024. Ripple and Securitize announced a direct integration, embedding Lust, Ripple's regulated stablecoin, directly into Securitize platform. Now holders of BlackRock's tokenized institutional liquidity fund can swap out of their position and enter Lust on demand. Instantly, 24/7. That's not a press release. That's programmable liquidity. That's real-time settlement. That's the pipes being connected. And now, right now, the New York Stock Exchange is sitting down at the same table. Here's what the average investor sees, a partnership announcement. Here's what you should see. The largest, most prestigious stock exchange in human history is integrating into infrastructure that has Ripple's fingerprints on every layer of it. The XRPL isn't just being discussed for tokenized asset settlement. Securitize is actively building on it. XRP's ledger is not a candidate for this. It is already in the foundation. Larry Fink, the CEO of BlackRock, the largest asset manager on Earth, said this week that tokenization will transform finance the same way the internet transformed communication in 1996. Not someday. The same way. Same magnitude. Now ask yourself, if that is true, and the pipes of that transformation are being built right now on Ripple's infrastructure, what does that mean for every token in that ecosystem? Let's do the math that most retail investors never bother to run. The cross-border payments market moves approximately $150 trillion per year, every single year. The foreign exchange market turns over $7.5 trillion every single day. And right now, the legacy correspondent banking system, the SWIFT system, holds roughly $27 trillion in what are called Nostro and Vostro accounts. That is $27 trillion in capital that is frozen, locked up, doing nothing, just so banks can make sure they can settle payments in foreign currencies. XRP was designed, specifically mathematically designed, to eliminate the need for those accounts. You don't need $27 trillion sitting still if you have a bridge asset that settles in 3 to 5 seconds. The capital unlocks. It flows. The system breathes. Now here's where the math gets interesting. There are 100 billion XRP. Fixed. That number will never change. Of those, approximately 55 to 57 billion are in circulation. Exchange reserves have been falling. Supply is tightening. And transaction volume on the XRPL just crossed 3 million transactions per day, triple what it was in mid-2025. Think about what happens when you take a fixed supply asset and you attach it to a market that needs to move $150 trillion per year in cross-border volume alone. Even a fraction of that flow creates velocity pressure on the price. Why? Because XRP's utility as a bridge asset is actually more efficient at higher prices. When XRP is worth more, You need fewer tokens to move the same dollar value. That means less slippage. That means faster settlement. That means institutions who need precision and predictability actually prefer a higher priced XRP. They are not hoping for lower prices to buy more. They are building the demand that makes the price structurally higher. And now we're adding tokenized securities settlement on top of cross-border payments, on top of stablecoin liquidity, on top of real-world asset tokenization, all flowing through infrastructure that has the XRP ledger in its foundation. This isn't a prediction. It's a requirement. At scale, the math demands it. You don't have to take my word for it. Run the numbers yourself. The answer doesn't change. Now let's talk about what the smart money is actually doing while retail is asking why the price isn't moving yet. Ask yourself this. Does a firm like BlackRock, which manages over $10 trillion in assets, partner with a company's infrastructure on accident? Does the New York Stock Exchange, an institution that has been operating since 1792, announce a 24/7 tokenized securities platform without years of legal review, risk assessment, and regulatory preclearance? These entities do not gamble. They do not FOMO. They position, quietly, methodically, and then the announcement comes, and everyone calls it a headline. Ashish Birla, who runs Evernorth, the largest XRP treasury company in the world, put it clearly this week. He said the version of XRP that drives sustained utility demand is when banks and businesses are using it as working capital. And he said the signals from institutional use are growing. Not as fast as the retail noise, but growing. His firm manages XRP as a treasury asset because he was inside the Ripple ecosystem for years. He has seen what is being built behind closed doors. And he is going all in. Meanwhile, on the regulatory front, the CFTC's chairman this week announced the launch of a new innovation task force, explicitly designed to build what he called clear rules of the road for innovators in our financial markets. The Stablecoin Clarity Act is moving forward. The stablecoin yield dispute between U.S. senators and the White House has been resolved. And according to Polymarket, there is now a 67% probability that the Digital Asset Clarity Act gets signed into law this year. The legal fog that has suppressed this entire market, that has kept trillions of dollars sitting on the sidelines in hedge funds and banks and sovereign wealth portfolios, is lifting. Not theoretically, actually, procedurally, legally lifting. The informed investor doesn't panic when the price is quiet. The informed investor understands that this is the phase of accumulation. This is when the foundation is poured. The people complaining about price in the comments right now are the same people who will be saying, I knew about this all along, in 18 months, after they've done nothing. So what are we actually watching for? What's the trigger? There are multiple catalysts converging in the same window, and that is what makes this moment historically unusual. First, the Digital Asset Clarity Act. If this gets signed in 2025, institutional custody rules, compliance frameworks, and asset classification clarity become law. That is the single largest gate blocking institutional capital from entering this market at scale. That gate is the closest it has ever been to opening. Second, the Stablecoin Act. Rlust is a regulated stablecoin. The moment stablecoin legislation is finalized, Rlust's role as a programmable liquidity layer inside platforms like Reprice, inside BlackRock's tokenized funds, becomes legally unassailable. Every major financial institution on Earth can use it without legal risk. Third, NYSE and Securitize 24/7 tokenized securities platform is not hypothetical. It's in development. When it goes live, real-world asset tokenization moves from pilot programs and press releases to actual market infrastructure. And the XRPL is the ledger that Securitize is building on. These are not different dominoes. They are the same domino. When regulatory clarity, stablecoin legitimacy, and live tokenized securities markets converge, what happens to the asset that bridges all three? The window for accumulation is not measured in years from today. The infrastructure is already built. The partnerships are already signed. We are waiting on paper, legislation, approval, go-live dates. And paper moves faster than people think when the pressure is this high. Here is the brutal question you need to sit with. What happens to the price of a fixed supply asset when the three largest institutional use cases for it, cross-border payments, tokenized security settlement, and stablecoin liquidity, all go live at the same time? The supply does not change. 100 billion, fixed. The circulating supply is tightening. Exchange reserves are at multi-year lows. And institutional players, who we just established do not move without legal certainty, are already in position. The door is not going to close slowly. When the regulatory unlock happens, the repricing is going to happen faster than retail can react. Not because of speculation, because of actual structural demand that cannot be filled by the existing liquid supply without price appreciation. Ashish Birla said it plainly. When XRP functions as working capital for banks and businesses at scale, the price will reflect it. He didn't say if. He said when. The question is not whether you believe in XRP. The question is whether you will have a meaningful position before the math asserts itself. The window is open. But windows don't stay open. If you made it to the end of this, comment bridge below. I want to know who's actually in the room. Here's the thing about this moment in history. The people who are going to look back at 2025 as a turning point are not the ones who had the best timing. They are the ones who understood the structure while the crowd was distracted by noise. The NYSE, Securitize, Ripple connection is not a rumor. It is a documented, on-chain, legally filed, publicly announced architecture. One is a bubble. The other is a bridge. Stay rational. Stay positioned. In a market driven by emotion, composure is the edge. I'll see you in the next one.